Hello, family. Welcome back to Concrete Pastures. I'm Nancy Mlemwa Sisi. I am so excited. We have our repeat guest back. Mr. Noah Ndhlovu is back. For anybody who's new on this platform, and thank you so much for anybody who's joining us. This is a platform where we highlight immigrants who have relocated to different countries in search of greener pastures. We share our stories of our various experiences and lessons that we've learned along the way. We offer new perspective on the journey of an immigrant. So whether you are currently an immigrant, a soon or later to be immigrant, or just curious, come along with us on this journey and let's get a better understanding of what it really means to be an immigrant. While you are here, please subscribe, like, and share. Oh my God. This is the time of the year that I dread personally. If you're like me, we're here to talk about taxes. I mean, last time Mr. Noah was here, it was season 2, episode 15 and 16, part 1 and 2. Please check them out. You get to understand his story, his immigration story, and everything else that he's working on. Just a little bit of him. He's a public health strategist, media personality, tax advisor. That's why he's here, life coach, author, and poet, expert in program development, management, and strategic analysis, passionate about impactful health initiatives and social change. Welcome, Mr. Ndhlovu. How are you doing?
Yeah, it's a pleasure to be here to share these moments and to just see how we can help our people to be more knowledgeable and informed of what is happening.
Listen, for me, this time of the year is just like, okay, I feel like my money is being stolen every time I look at my paycheck. For all of us
Mhm.
immigrants, I think we can feel the pain. And then come January, February, March until April. So tax season for anybody who's watching and listening outside of the US of A, it's from the end of January to April. And today we want to touch on personal tax returns. Mr. Ndhlovu is specialized in both consumer and business, but we wanted to touch on personal because that's a lot of what touches us. And for anybody who's interested in knowing the other side, he does both. So once you reach out to him, you can actually ask him about the business side as well. But today we are discussing the consumer side. So for starters, I mean, you are a man of many talents. Tax advisor, seriously.
We're trying to do as much as we can to
I
make
love it.
life easier for people.
I love it. For anybody who's joining us, thank you so much for joining us once again. And I will start with the question of you just explaining to us what is the importance of consumer taxes, and then also the impact for individuals and the economy as well.
Yeah, so again, thank you for having me back on the program. This is a very important topic, a conversation that needs to be had. Especially, there's actually an adage or saying, they say there are only two things that are true in America: death and taxes. So at some point, people die, and either way, you have to pay taxes. So those are some of the things that we have to figure out to, as much as possible, to learn about this topic so that at least we can use the tax law to our advantage. So consumer tax, in most cases, it's referred to as individual taxes. So consumer taxes are essential for keeping up the government running. So the government depends on the funds that they receive, or the taxpayers, which is you and I. pay to keep the government running for social programs, education, infrastructure. So it's not something that one can easily just say, decide that they don't want to pay taxes. Taxes is what keeps the government running. So if you overpaid your taxes during this time, people file their taxes. So if you overpaid, you get a refund. So if you underpaid your taxes, which means it gives you an opportunity to settle your bill with the government. So that is what I can say about individual taxes.
So for a lot of us immigrants, my first job was babysitting. I was getting paid cash. And then once I started to work where they were deducting, I didn't realize it. My first paycheck. I'm counting every day. I was getting $5 an hour. And I'm counting. I'm like, oh, I've worked 8 hours. This is how much I'm gonna get. By the time the week comes, I get my paycheck. It's like a joke. I'm like, what happened to my money? So, and then when January comes, I'm filing for taxes. I'm single at the time. Could you just explain to us the way the deductions go for single and also for couples or the people that do add their children or dependents on their deductions?
All right, so that's a good question. So in this country, the system that is employed is called progressive tax. So when you work, the more you work, the more tax you get charged. So you see on your tax, on your pay stub, they take out FICA, federal insurance contribution, and there's also Social Security, there's Medicare, sometimes there's state tax, the city tax, the municipal tax. There are all kinds of taxes. So all those taxes are necessary mission area to keep up the government running and to cover social programs and things like that. So most people, especially our people, immigrants who are coming from another country, they always ask and wonder why there are all these deductions that are taken out. So a single person is considered single for tax purposes. You are what is called a standard deduction. A standard deduction every year gets adjusted due to inflation. So the more the inflation and the more the standard deduction. So for instance, for last year, it was something like 11,000. But now this year, the standard deduction has been pushed to 13,000. So, which means a single person has a single person, a married person, married but filing jointly, and there's what is called, previously it used to be called widowed, divorce, but now it's considered QSS, qualified single survivor. So in this case, what it simply means is that each person falls into a particular bracket. So the higher money you make, the more taxes that you get charged. So if you are single, your standard deduction is for this time around is 13,100. Now, if you are filing your taxes as head of household, which means your deduction is slightly higher. And the best case scenario when it comes to filing taxes is to file married and jointly. But in most cases, if you're not married, obviously you're not going to file married jointly. But if you're married, the best tax bracket for you to get a higher refund is to ensure that you file jointly and you include your dependents, because you asked about dependents. If you have dependents, it puts you in a better bracket because you can qualify for what is called ECE, Earned Income Credit. So depending on how much one makes, it's going to influence how much tax they are going to pay. So if you are single, chances are, especially if you don't have any dependents, you are likely to pay in a little bit more. But what normally helps out people is the fact that they have deductions and they have some credit. So that's what helps out. But if you don't have that, then it's always best to make sure that at least you are keeping receipts of all your expenses, because that comes in handy to help offset your tax liability.
Gotcha. So when it comes to dependents, there's people have different age. Like my kids are 4 and 9. And there are some people who are taking care of, let's say, their parents and their older parents. I know for sure I can claim my children, but for people who are taking care of older parents, they're not working. Are we able to claim our older parents?
Yeah, so a dependent does not necessarily mean a child. There's what is called a qualifying relative. So in your case, the 9 and 5, those are dependents if they live in your household and you pay towards their upkeep 6 months. The minimum, the IRS looks at the minimum is 6 months. If you contributed for their upkeep and daily expenses for the kids, then as long as they are below 17 years old, then you are good. But in the case where you have parents that they may, depending on the situation, so the tax law is written differently. Your parent could qualify, or anybody who is above 17 may qualify as a child due to some technicalities. If you are contributing towards their upkeep, again, it depends on the situation. So let me give you a specific example. When you are 65 and above, mostly people would have retired by then, but I know, I mean, most people are working and things like that. Technically, you can file for your parents as dependents. And also, depending on the situation, let's say you are taking care of a mother who has some condition. As long as you're paying for their upkeep, then you can claim them. But if you're not paying for their upkeep, then it's a different case. So there's also what is called a qualifying relative. So in this case, a nephew and any other people who fall into the certain category, they can be claimed provided that you provided expenses for them, and they may not reside in your household as long as it can be documented that you have been providing expenses for the whoever. Then there is a way that you can qualify. I mean, you can claim them, but in most cases, you have to be below 17 years to qualify for what is called EIC. So when you claim a child, in most cases, depending on your income, you qualify for earned income credit. The earned income credit is what excites everybody.
Yeah.
That is if you have kids, because not only do you get the credit for the children, you also qualify for earned income credit. So this is why you find that the refund, if you have dependents, it's usually much larger compared to somebody who is single and they file their taxes.
Yeah.
Then in most cases, the refund, if any, it's usually just minimal. But a person who has dependents, in most cases, they have a huge refund because they qualify for other deductions. And also at the same time, it lowers your tax liability if you include EIC.
Got it. No, amazing, amazing. So I have questions. I have too many questions even for that
Mhm,
piece, but I'll move on. People can ask questions once they reach out to you,
mhm.
even more. But I want to jump on to what are some of the mistakes and misconception of, our individual tax returns filing? What have you seen around?
Mhm. Yeah, the major ones, the major mistakes that people have is typing in the wrong social security number or typing in the
Oh, wow.
wrong item or messing up on the date of birth. Because the system that we have in Africa is the day, the month, and the year. So if
Mm,
somebody, let's say, was born in March 5, let's say 1999, in most cases, if they just put 0305, I've seen people mess up. So even I'm very careful when I'm preparing somebody's taxes. I'll ask them, especially if they're coming from Zambia or any other African country, you ask them, which month were you born? Write the month. Is it May? Write the word May 10, 19, whatever, 2000, whatever. Because that is a common mistake. So you want to make sure that at least when you are filing your taxes, you present, this is why it's the law, it requires you to present your ID. The reason that that is required is obviously to avoid identity fraud and all that stuff, but they want to make sure because other people write the date of birth differently. But the most common one is the mess up on the social security number. So you want to make sure that at least as tax professionals, we are required by law to make copies of the tax ID or the social security number, make copy of your picture ID so that because somebody may come up and say, no, my name is Nancy and I'm filing taxes. No, that's why you want to make sure at least it's the right person who is presenting those documents. So in some cases, the address, you want to make sure that at least you are providing the right address
mm.
because you want to receive the refund in a timely manner. So you take your due diligence upon yourself to ensure that at least your address, the date of birth, the social security number, and the names. I've noticed most of our people who are coming from Africa, they do not have middle names. There are people who have middle names, but in most cases, Zinaipa Mkombo, it's not on the reg or it's not on the NRC. But they will tell you that, oh, my name is Chirufia. They call me something, but you want to make sure that at least you provide your legal name when you're doing taxes. So those are the common errors that we see.
Okay. Roy is raising his hand. I'm gonna ask. I'm gonna give time for questions.
Mhm.
Just write your questions in the chat, and I'll ask him questions, please. Thank you so much. Um, so the next question I have for you, for that, thank you for being detailed with that. What are, like I always want to get the max. Okay, I feel like my money is just gone. I get a bonus, it's like half of that is gone. So
Mhm.
how can we have like how can we maximize on our return? Like what are some of the strategies that you can help us, some tips on how we can maximize on our returns?
Yeah, so thank you for the question. So obviously, most people want to have a huge refund when it comes to taxes, and you don't want the case that you are the one who is paying or you're owing the government. So that's
Mm-hmm.
we don't like that. So we want to make sure, especially for our friends who are in the caregiving jobs, you want to do your due diligence to document your expenses. You want to do your due diligence to make sure that you're keeping tabs on your receipts for what you're using for your business. So, for instance, when you are working as a W-2 employee, which is mostly the standard way for most people, when you're a W-2 employee, which means deductions, your FICA, your Social Security, your Medicaid, and the other taxes, they're taken out. So you are being given the difference after the taxes is taken out. Now, if you're a 1099 employee, they give you the whole chunk. And it's up to you now to do your due diligence to pay the government. So 99 times out of 100, a person who is a contractor, a contractor is somebody, for instance, like it's a caregiver and you are given a 1099. You are considered from the IRS perspective as a contractor, and you are, in most cases, 99% of the time or 100% of the time, you are issued a 1099. A 1099 is a statement of earnings for the period, in this case, 2023. So taxes are prepared for the following year. So 2023, it's now, this is the season that we are preparing and working on these taxes. So in order for you to get a huge refund, which is everybody's goal, is to ensure that you do your mathematics. You talk to, I encourage people to talk to your tax consultant. They will help you plan accordingly. So let me give you a good example. So if somebody makes more than 13,000, you are cut off from earning EIC in some cases, depending on how much is your income. So this is why I'm sure we have heard some people say, oh no, I don't want to work so many hours because I'll exceed or they'll cut off my benefits. So in order for you to have a good understanding of what is going on nowadays, you may have seen on social media, people encouraging people to talk to a tax advisor or talk to an accountant because they will help you to plan accordingly. So that at least you don't exceed certain threshold that puts you in a different tax bracket. Because in this country, it relies on a system called progressive tax. So for instance, if you make 10,000, below 11,000, let's say for the whole year, your income was less than 11,000, which means your tax bracket is 10%. Now, if you made more than 11,000, let's say 11,500. So your tax bracket is the 10% plus 12%, which is 22. It's called progressive because it progresses. So the more money you make, the more taxes you get. You owe the government. So you want to make sure that at least you are doing your due diligence to ensure that you get a huge refund by speaking to a tax professional who advise accordingly how much you need to be mindful not to go before certain thresholds, not to pick up any overtime that pops up. I know usually most people will pick the hours here and there, and then when it's tax season, they'll be like, oh, I had to work, but now I owe so much. So I encourage people to talk to you can reach out and we can chat on a one-on-one on these things. Taxes is something that I've been doing for quite some time. So in order for you to have a good refund, document your expenses so that at least you are able to apply them to reduce your tax liability. Documentation in this case is if you use your phone for business, if you drive certain places to do your business, the mileage has to be deducted because it has to be allotted there's a form called Schedule C where you have to document your mileage. For instance, if you don't document your mileage for going to work. No, you document the mileage if you are.
You just read my mind. I was about to ask that. I'm like, wait, I drive my car to work. Are you talking about that too?
Yeah, so like for instance, if anybody, like if I work just a regular job, I have to drive from my home to get to my job. So the driving from my home to my workplace, that's not deductible. Now, if I'm at my workplace and then I have to do certain things, let's say you're a caregiver and you drive from your home, you get to your workplace. Now, the client gets into the car and you have to go to the hospital, that's documented mileage. So you want to make sure that at least you are keeping up with that, so that at least when time comes, like this time around during the end of the year, where you are looking for, what did I do on such and such a day? What can I deduct? What can I subtract? So this is why talk to a tax professional before the, like especially this time around, before the beginning of the year, so that at least you have a roadmap of what to look out for. I know it feels good when you pick up some extra hours to obviously meet your financial obligations, to pay your bills and all that stuff. But that, in a way, may come to hate you on your taxes because, like I say, this country utilizes a tax system called progressive tax. So if, let's say, somebody made $50,000 for tax period 2023,
Yes.
the first 11,000 of the 50,000 is taxed at 10%. Now, the 11,000 to 22,000, it's taxed at 12%. So if you, from the 50,000, from 10,000 to 22,000, your tax bracket is 10 plus 12. And then if you exceed the 22, going further up to 44,000, there is another tax. So this is why you find that like I say, it's called progressive tax because it progresses. So you want to fall within a certain tax bracket. So this is why you hear people talk about my tax brackets. So what is my tax bracket? The bracket is so that when you go beyond that, then you are taxed at a different rate. So this is why it's always important to talk to a professional who can help you have a strategy. So reducing your tax liability, ensuring that you understand what are credits, what are deductions, helps to reduce your tax liability so that at least you pay as much as possible to the government, and then you put, like Michael Sata would say, more money in your pocket.
Oh my goodness. There's a really good question here from Miss Lucy. I think it goes hand in hand with that because the thing is, you think you know certain things because you've been around for a long time. This is why we have expertise like you. I didn't know my tax progresses. I know Uncle Sam takes a lot. That's all I see
Oh
on my
yeah,
paycheck.
yeah.
But I've learned a lot just sitting here. So the question is, at what age does someone is exempt from paying tax?
You are never exempted from paying tax unless it's if you are receiving combat pay. Let's say you are out there shooting people. Combat pay is exempted from tax, and insurance payment is exempted from tax. But normal wages and tips, you are not exempted. When you are 65, you may get some deductions or credit that help you to lower your tax liability, but you are not exempted from paying tax in the US. This is why I say if there are two things, it's death and taxes.
Yep. I can tell you guys, even my little ones pay tax. They go for a commercial, they get taxed on their paycheck. It's just
Yeah,
insane.
you buy candy at the store. If
Yep.
candy is $1, then there is a 8 cents or whatever. So I think that's one of the uniqueness about this country is that the tax system is very functional. Unlike back home in Africa, most of the countries have failed to have these institutions to collect these taxes. If, for instance, in Zambia, if you win the lottery, the pick a lot or the jackpot or whatever it's called, if it's $1 million, they'll give you $1 million.
They,
Here,
yeah.
yeah, I
Oh,
think
that's a good plan in
now
Zambia.
here in the US, if you win $1 million, you don't get $1 million.
How?
if it may say this guy has won the Mega Million or whatever, I mean, these lottery things they have. Let's say that if the amount is $1 million, taxes from there, it's about 40% or so. So you get up somewhere about 600 if you get the lump sum, unless the money is converted into these annuities, which is another conversation we can talk about. Then it's spread out because you be accumulating interest on those winnings. So if you're accumulating interest, then those interest you get charged. I mean, it will be taxed.
Yep.
So it's just one of those things like you are taxed any which way unless you get to a point where you are. I'll give an example. Donald Trump and these people on the top, they pay little to no tax. You can pay little to no tax. You know why? It's because those people use tax professionals to plan for them. This is why I tell people that you want to make sure that at least you speak to a tax professional who knows what they're doing, and then they'll be able to advise accordingly. So,
Yes.
in a way, you can be legally exempted from not paying any tax. How much tax do you think Jeff Bezos, Donald Trump, and these other people? Last time, I think from the taxes that we saw, Trump was paying from millions, $750. That is true, and it's legal. There are certain tax codes. For instance, Code 162. You can, mm, as long as you can explain and justify that you are using this to earn your business, it's a deduction. So I know it's outside the scope of this conversation. I'm just giving an example.
Yeah.
For millionaires, what they do in most cases is, for instance, when you see me wearing this white shirt, I mean red shirt, I can tell the government that this is part of my identity as a tax professional. So when I go out there, people need to see me in the red shirt. So this is part of my identity. Therefore, it's a deduction because it helps my brand as a person. So people who have a yacht that, oh, I use this yacht to go and advertise so that it helps me and my person. So when I'm traveling, taking people to see, let's say, real estate, I have to wear this Gucci nonsense or this. What's the that's women are crazy about this handbag, Gucci, and what's the other one?
Louis
Uh,
Vuitton?
Louis Vuitton. Yeah, so I have to have this Louis Vuitton whatever outfit so that one, it helps my image, so that when I go out there, it's my branding. So you find that these people are able to deduct all these things from the taxes because according to Code 162, it's illegal. So this is why you have huge people get away without paying much of the taxes. But it's something that requires a lot of planning. This is why you talk to a tax profession. They can help in some of these things, but it's not everyone who knows. That's why I'm saying, like, some of these things you want to make sure that at least you are talking to people who understand taxes, and they'll be able to help out. So that's a long, very long answer to your question.
No, really, really good. Another question. Um, so Royd, my question is a typical caregiving scenario. So it is okay if I can say it out, let's say it loud, so I can save some trouble. Okay, no problem. Um, at the end of this, we'll open it up for everybody to ask questions. Thank you. Please hang in there for me. Um, so because most of these questions that we have outlined might be answered while you guys are on here. So my next question is, what are some common red flags that can trigger audit? I think it's something that a lot of people worry about. Um,
Mm.
that's why people don't really like to do their own taxes by themselves. Because I've used, I think, TurboTax years ago, and I was
Mm.
always worried as to, IRS coming after me. Am I doing it right? Am I not? Even though there's like some help in there that someone can help you. But um, I was always worried of getting an audit. Um, so what are some of the red flags that people can avoid in trying to trigger those audits?
Yeah, so that's a good question. So when it comes to audits happen randomly. So from time to time, the IRS will just randomly pick some uh, returns and say, okay, we are going to edit these. It's more like a survey. Some of you may have received Gallup poll calls asking you, hey, how do you feel about this and this? They randomly do that. So it's not something that is planned, but there are situations where if you screw up on your taxes, where the telltale signs for audit in most cases is one, underreporting your income, or you are claiming children whom you're just making up. It has happened. People were writing social security numbers, which they have no idea what it is, just to, I mean, there were cases, I think some people in Texas, I think even Florida, where people would get away with making up stuff. So sometimes the IRS, these are not magicians that, I mean, they know. They rely on your integrity and your honesty to be forthcoming and say the truth. So the telltale signs is underreporting your income or making up dependents who are not there. And then the major one that I see is when you claim as head of household. So in most cases, when you claim as head of household, you are either claiming somebody else's child. I mean, I know people do these tricks. You get your friend, say, oh no, can I claim one hour? Or can I, whatever, to help, whatever. In most cases, the names, like if it's Mr. Banda, the child's last name is something else. In most cases, head of household is a telltale sign because the IRS know that this person is using somebody's child. What's the relationship to the child for them to claim? So those, you want to be careful when you do some of these things. So claiming head of household, married jointly, and you have dependents. In most cases, that one is a very easy way. You are left alone. But head of household, you want to be careful when you do that because it may trigger some audit, especially if you leave out some income and just sometimes type, like I said, not typing the correct social security number and messing up on the dates, like I say, month 0504. If it's supposed to be 0504, now you wrote 0405 and things like that. So this is why, like I say, I always double check with people. Tell me, were you born in May or were you born in September, October? Don't just write 0908. So like to me, I just always want to double check. So those are some of the, if you are there, I mean, definite errors on the refund, then the IRS, unfortunately, they'll come knocking. And when the IRS come knocking, it's not necessarily the end of the world. I mean, we can always give you advice in terms of what you need to do. In this country, there's what is called the Freedom of Information Act. You can trigger an equivalent of a 991, what's that? 911, where if you are edited by the IRS, it just simply means your file has been triggered to be double checked. Does not necessarily mean that you have done something wrong. I know most people when they say like audit, then they start trying to jump out of the window and all that stuff. If you know you've done something wrong, then you have reason to be afraid. But if everything is fine, an audit is just a verification just to double check that you are who you say you are. Because in some cases, I mean, There are people who have been dead, people are still filing taxes and on their behalf and all that stuff. So it's a sort of like a quality control for the IRS just to ensure that the system is working accordingly and all that stuff. So it's not a concern if you get audited unless you are doing something wrong.
Really good advice. I would definitely agree since I'm in the financial space. It's funny like how it is. Like sometimes you miss a number on a social security. Someone's name literally
Mhm,
comes up and it's the
mhm,
same process. Like if you don't do your due diligence in time in terms of verifying your social security number, verifying your date of birth, someone else can actually come up and it's because it's just a typo and sometimes it's an honest mistake as to just
mhm.
making sure that's really really good advice and wow, claiming to be the head of household, wow. All right, so we in as immigrants we have like 10 jobs for a lot of people
Mhm.
here there. How does somebody consolidate all of that in terms of filing for their tax returns? So let's say I work at the hospital, I also work at the bank, I also work for Macy's during, the holiday season, and
Mhm.
I have another job. So how do we consolidate all of that and how do we claim for all of those?
Yeah, so you may have, regardless of the number of jobs that you have or income streams that are coming in, the rule of thumb is you have to report your income. If it's JC Penney, working at the mall, or working caregiving, or doing independent contracting. In this case, for instance, if you drive Uber or Lyft or whatever the case may be, the key is always keep tabs of your income. And I've reached out to some of the people who have worked with me. There is a spreadsheet software, not necessarily software, but there's a spreadsheet which I have shared with some people, and it helps them to track expenses throughout the year so that at least if income comes in from this source, income coming from the other source, the goal is to always ensure that at least you have those records, you're keeping up with good records because the IRS always has records of you. So what most people don't know, especially is, let's say, if you work as a 1099 person or a W-2 person, there are usually three copies of your documents. Number one, they send you a 1099 or a W-2. The second one is sent to the IRS. The third one, it remains with the employer. So if you are a 1099, a caregiver, for instance, the people that you work for, if they issue this 1099, which they are supposed to, but I know, yes, I mean, situations are different. So there are three copies. One goes to you, one goes to the IRS, one remains with the employer. So when you report that you made $50,000, the IRS already has that information. They just want to verify if you put what they already have. So sometimes, going back to your previous question, what may trigger an audit is, don't think you're the only one who received the W-2. The IRS gets a copy. So when you report that income on your end, it has to match. When it doesn't match, the system, it's like, oh, there's a red, something red pops up, like, oh, yes, I don't know how but it's like the numbers don't match. So now those are candidates for potential follow-up. In this case, it could be an audit. Say, we have 50,000 on our end. Let's say Mr. X that you work for reported to us that you made 50,000 in 2023. Meanwhile, you have said you made 30,000. What's going on? So that's how, because there are always three forms to you, the employer, and the IRS. So you want to make sure, again, to do your due diligence, to report the right income so that at least you don't find yourself in a situation where you have to start explaining.
And if you do find yourself in that situation, please, guys, keep your receipts. You pay for childcare, you pay for whatever, keep your receipts. All right, that's one advice I can give. That's my 2 cents. Um, Before we open it up to everybody, what are some of the what's going on now? Do we have any updates on any uh, or updates on tax returns or taxes itself, like new law or anything that we haven't heard?
Yes, yes. So the latest updates has to do usually for to the average person for the most part. It's the update that relates to child tax. Because previously, if you recall, during the COVID-19, I'm sure you were smiling when the PPE bill, where they had to increase the child credit. So it was increased to 3,600.
Mm-hmm.
And then everybody else was smiling and everybody was going to the mall to do some shopping and all that stuff. Now, the following year, that was taken off because it was just a
Mm-hmm.
one-time thing. So it went back to 2000. So now they are making some adjustment, which the House has, I think the House has already passed. And the good thing is these laws are retrogressive, so which means what they decide, then it's going to be applied. So as it stands, the child tax is should be 1,600, but now they want to push it to 1,800. So that is the latest adjustment. But the other stuff pertains to the retirement, which I mean, it may not apply for to most people. So usually most people, there's a lot that has been happening in the background because every year, the thing with taxes is every year as a tax professional, you have to attend conferences
Yeah.
so that at least the IRS over the summer, like summer of this 2024, they will be announcing the changes which will be applied on the following year. So every year it's continuous learning as a tech professional, so at least you always keep up. But I think most of the retirements and the changes on the business side may not be applicable to most people, but the main one that I think most people are concerned about is the earned income credit, which is still applicable if you qualify, and also for the dependents, they are trying to adjust the amount because a lot of people had so much money at one time during the COVID, but now when you did your taxes last year, it wasn't the same. So Congress is working on some legislation, but you know how it is with these politicians, they will argue it out back and forth. But yeah, so that's the only thing. There are some proposed changes to the child tax.
Would that apply
Uh,
to this year? So if I filed already, would that apply to
yes,
me and they can make adjustment
yes,
and give credits?
yes, yes. It's retrogressive, which means the IRS once the changes are made, then the IRS will make the adjustment. But also, people need to be mindful of. I'm sure you may have heard about government shutdown. So government shutdown may impact the IRS because the IRS, those are federal employees. When there's that confusion with the politicians,
Yeah.
the tax preparation may be halted. So it has happened before where government shuts down. What it simply means is that the federal employees, there's no money to fund them. So if that is the case, which I think there are ongoing dialogue between the Republicans and the Democrats and the White House and all that stuff. But obviously, the goal is to avoid the government shutdown. But if that is the case, then if you delay to file your taxes, you may be impacted. So this is why we have been encouraging people to make sure that you file your taxes as soon as possible because this tax season commenced on January 29th, which is just like a week ago, and it ends April 15th. So this is the time frame to make sure that at least you don't want to wait until the end. You want
Yeah.
to make sure that at least you do your due diligence to file, get your paperwork right, get your receipts, or whatever the case may be, so that at least you have everything, so that you end up with a huge refund. Just like Michael Sata said, more money in your pocket.
I love it. I love it. Listen, this is as always, it's always a joy for you and I to connect.
Mhm.
For anybody who's joining me or haven't heard of Concrete Pastures, me and Mr. Ndhlovu we connect even behind the scenes. So we have an episode of him for you guys who are interested in knowing his immigration story. Season 2, episode 15 and 16, part 1, part 2. It's fun. You enjoy it. I encourage that you listen to it. I'm going to share actually our link to our YouTube channel, and we are on all platforms, by the way, where you can find your podcast. So we're gonna open it up to everybody. You guys can turn on your videos if you want. You can unmute yourselves. Let's fire some questions. Again, I thank you, sir, and thank you for everybody who's joining us today. And go ahead, guys. Feel free to ask your questions, please.
I'll go first. Can you, I think you can see
Go
me now.
ahead, Ronald.
Thank you. Yes, my name is Wright. My friends call me Rico, that's my other name. I wanted to, for me, it's a scenario. I think my questions are scenario based. I think that's the easiest way I understand things. So imagine a situation, you come into the country, you have that relief, and that relief, you still don't have your ITIN. And then later on, 8 months later, you get your ITIN. And by God's grace, you find your own job. You do the right thing, you submit your ITIN. You also go to your bank, you give them the ITIN to add to your account and all that. At the end of the whole cycle, you get your 1099. Now, that 1099 does not include any other little amount that came in your account previously within that year. Yeah. So now you have this 1099, and you know very well that there were these other amounts coming in here and there that were not part because you didn't have your ITIM then. What happens to that money? I think that's the kind of my scenario, and I want to be very clear as I'm seeking for assistance to file. Thank you.
Thank you for that question. So first, I want to ask you back one question. Ms. Ndhlovu, you're going to answer, but let me just ask, because you mentioned bank account. Did you also get a 1099 from your account? Since I'm in the banking space, I can help a little bit for the savings account.
I haven't received the 1099 for the savings account yet, but something interesting is this: all my taxes money is kept in my savings account.
Okay.
So that's why I put all this, whatever it is I'm trying to save for the end of the year, I put it in there.
Okay.
That's
So I just want to this is a common theme for a lot of our immigrants in our community. So in a savings account, regular savings account, if you earn $10 or more, they'll send you a 1099 of interest. If you do not earn any, let's say you earn $9.99, they're not going to send you a 1099 for you to file against your taxes. So in the event you don't receive it, that means you did not earn that much interest. So for anybody who has earned $10 or more, you will get a 1099 from your bank. But in the event that you've earned it and you haven't received it, you have to call your bank and ask them because you can check right now. I mean, for a lot of banks, they have online banking. You can check for yourself. You can also see and calculate a quarterly or monthly, or however you get your interest. You'll be able to calculate that you got $10 or more. Off to you, Mr. Ndhlovu.
Yeah. So thank you for that. Yeah, and that's true. So a 1099 that has to do with the bank. By the way, according to the law, your institutions, your employers, and everybody else, they have until January 31st to send you your tax documentation, because the year concludes from January to December 31st. So now they have from January 1 to January 31st to send you this documentation. So we are just barely within in February. So this is why they try to put the tax filing towards the end in most cases. But I've seen people, they can queue it up. You can file your taxes, but it won't be transmitted to the IRS on time until they open. So to your question, 1099 that have to do with the bank in most cases, I mean, 100% of the time has to do with savings. Depending on how much money, because if you open a checking account, there's no tax obligation in that regard. But if you have a savings account, there's a form called a W-4. In most cases, you sign that, it's given by the bank, so that any interest that you accumulate on your principal then is supposed to, it's taxable. So I don't know how much money we are looking at from your end, but the question that you ask is, what of the money which was not, is not documented? In most cases, if people who have a lot of money, because there are thresholds when it comes to taxes. For instance, if you made more than 600, and for businesses it's 400, the threshold. So I personally would keep good records and follow up with the bank, depending on how much money is there. But if it's money coming in from an employer, 1099 from, there's a 1099 called NEC, non-employee compensation. But in this case, you're talking about the bank. So it's good to include that, but when it comes to taxes, pretty much, I'm not sure about the amount. So, I mean, maybe you can call outside this platform so we can discuss a little bit more, but it's something to do with your savings account, not income coming in from wages. So that's what I'm hearing from you.
Sorry, through Nancy, I just wanted to clarify something. So there were two persons. So one was
your volume at
It's
some
in
point
and out.
fades out. Yes.
Can you hear me now?
Yes.
Okay. Yes, it's the headsets. So there were two questions. So there was one for the savings, right? The one that just Madam Nancy just added. So yes, I have a savings account, and that savings account is being used to keep an amount. I'll just give you a range, right? Like between $7,000 to $10,000 for specifically meant for taxes. If it's less, well and good. If it's small, then we work on that. Then I have, and all these funds are coming straight from wages. So they're coming straight from work. So then I transfer them from my checking account into the savings account. So I create some form of separation between, the checking and, funds I'm putting aside for those taxes and just my normal savings. So, and then I get a 1099 from my employers, right? And it comes through. And that's the one that I'm talking about now. So if I get that 1099, and then before I got my ITIN, I had some little monies popping into my bank account from relief and all that. So My question was, what happens to that then? Like, do I start now tracking back before the ITIN to include, you know what I'm saying? Yeah,
okay,
that's the
okay.
question.
Yeah, no, yeah, it's much more clear now. Yeah, so the year in which you obtain your item, you are not, basically, if you got your item in 2023, you are not liable for tax in that. So in those cases, those places, those instances where you have those funds prior to your item, you don't have to worry about that. So you focus on the which month did you get your item?
I got my ITIN in Feb 2023.
Okay, yeah. So your tax, you are liable for 2024. So you don't necessarily have to worry about the previous time. So as we go forward for 2024, this is when now whatever came in prior to you not having the item, it's not something that you should worry about.
So this would simply means that between Feb going all the way forward, that's when I'll be liable to pay for those taxes, right?
Yes, yeah, because you cannot be penalized when you didn't have the taxes. I mean, so when you didn't have the item.
Okay, thank you for the clarity.
All right, you're welcome.
Guys, any more questions? You can unmute yourselves while you ask the questions, and you can also jump on a video if
Yeah, feel free to ask a question. I think I see there's something in the chat, but if you want, you can just unmute and ask your question.
yeah, no, I'm monitoring the chat. We don't have right now.
As you are waiting for others, I know I can ask another question.
Sure, please.
This is a scenario of a colleague of mine who filed taxes for the first time, and then they found that they had more to pay and they were owing. So they paid part of the amount and they had like a 5,000 balance. And that balance kind of, they struggled to pay that, and then it went all the way to January the next year. Like in that particular case, what happens? I know they've been getting letters coming to them, being told to clear that amount, and they've not been able to clear. Probably they didn't have a job and all. But now that they have a job, what happens? Like, what penalties, or how does IRS respond to that?
Yeah. So thank you for that question. So the IRS, unfortunately, is not a friendly agency that you can negotiate your way out. The IRS is a collection agency for the government. So they are strict with their, okay. Yeah, so they are not going to be coming to you smiling, hey, you have to pay. No, they will just impose a penalty. So this is why the expectation, for instance, tax season opened like this time around last week, January 29th, and it ends April 15th. Now, let's say for your friend, the expectation is when you file your taxes, the IRS has about 21 days for the most part, unless if you have dependents where if you file first week, let's say you file the first week, January 29th, and you include dependents, the IRS holds that your entry until after February the 12th, if you are applying for EIC and income credit, which is triggered mostly if you have dependents. So they have to double check because previously things used to be different. So the IRS has about 21 days for the most part to issue a refund. In most cases, it comes in much earlier. So the expectation is the same on you from January 29th to April 15th. If it happens that you're not due a refund and then you are you have to settle a bill with the government, you have three options. The first option is they can deduct the money from your account, just like the way we receive money direct deposited into our accounts. The same thing, you can give your account details to the IRS and indicate on which day they will deduct those funds. That's option number one. Option number two is you can set up a payment plan. A payment plan, let's say you owe $5,000. As long as the tax is not paid between April 15th, January to April 15th, if it's not paid within that allocated time slot, then regardless, you get your penalties. So if you are not able to pay in one installment, then on each installment, there will be a late fee or a penalty and all that stuff. So for your friend who went all the way to January, the IRS is okay with that because they will still charge you interest on that. So in most cases, there's a penalty and then there's interest. So you want to make sure that if you owe, you try to clear it off as soon as possible so that at least you avoid those interests and things like that. So again, this takes me back to my initial comment that you want to talk to a tax professional. They help you plan so that at least when it comes to taxes, then you know what you're doing. Donald Trump, Elon Musk, Jeff Bezos, and all these people who are in the 1%, they're in the 1% for a reason because they plan.
Yeah.
So most of us, in most cases, we want to find after the fact. That's when we say, hey, Noah, how much do you think I owe? I worked last year. How much do you think I owe? That is the mindset that some of us are trying to discourage because you want to be proactive. You want to plan ahead of time so that at least when the time comes for taxes, you are not asking how much. It's like most people will say, what's going on? Like when you greet people, you say, what's going on? In a way, you're not supposed to say what's going on because it shows you don't know what's going on. So I want you to think a little bit about this. They will say, black people say, what's going on? Like, hey, you meet up with some guys, say, hey, what's going on, man? What's going on? In a way, you're indicating you don't know what's going on. So when it comes to taxes, you want to be proactive. You want to do the planning before the tax season so that you know your tax brackets, that you know that, okay, I don't have to work every weekend, every night and have 3, 4, 5 jobs. No, you can do that, but you have to figure out, okay, I shouldn't go past a certain amount. This is why you find these people are able to avoid paying taxes is because of planning ahead of time. This is what I'm encouraging people. So to your friend, when the money is not paid within the allocated time, you get your penalties and you get your interest. So thank you.
Okay. With the penalty and the interest, can they also do a tax deduction from that as an individual? So if I'm paying IRS,
no, you're penalized. The IRS is penalizing you.
So guys, I'm just trying to get us more money, okay? Really, really informative. Really great comments and great questions out here. So there's a question here. What percentage is paid for a person who does not have a Social Security number but has a TIN? So the tax ID number. So if they have a TIN.
Yeah, so the I-10, individual tax identifier number, which is I-10, or some people call it tax ID. So that is issued to people who do not qualify for a Social Security number. And these are people who are coming in from different countries. For instance, I know I'm just trying to educate some people on the item. Let's suppose there is a person here who has left some property in your name. Like there are people like, oh, they travel to one country, they fell in love with this beautiful man or this, this handsome man or this beautiful woman. And then they say, oh, I'm leaving this property in your name. So you're happy, you're excited. And let's say you live in Angola, Kenya, Zambia, you just met this guy or this woman, and somehow they pass on and then they leave something in your hand. Then you apply for an item. You may reside in Zambia or wherever, you can apply for an item. So an item is not only just for somebody here, because if the property is here in the United States, which means the government still wants you to pay tax. So those are special instances where somebody needs an item. So I just wanted for people to know what other instances one can apply for an item. So when you apply for an item, the rule of thumb is 30%. If it's 1,300 goes to the government. So it's 30%.
Lovely. Wow. Okay. If you don't have papers of status, should you be filing for taxes?
Yeah, that's a good question. So
I love it.
Yeah, so let me put it this way. When you live in this country, the expectation is you want to do the right thing. So when you, for instance, I usually give this example to some of my friends. When you over 60, I think it's over 60% of people who are so-called undocumented in the United States is they overstayed their visa.
Yeah.
They overstayed their visa. So they do not have the legal right to work. Now, the IRS is sort of like putting pressure on us as tax preparers, tax professionals, and things like that to do our due diligence to be asking questions and things like that. So when somebody enters the country, they overstay their welcome. They turn around and tell the government, hey, I'm here. Look, I'm paying tax. The Department of Homeland Security knows that this person has overstayed. But in most cases, they understand that obviously this person is quote unquote an economic refugee. These are people who are not a priority as opposed to somebody who is caught up in smuggling, using drug dealing and all these things. That's a priority for the government. Most of you people, if you are out of status, you open a bank account, the government knows because lending institutions, they connect with government. So a person who has an item, should they be filing taxes? Yes, if you have an item or a tax ID, then you have already communicated to the government that you are here. Therefore, they issue you, this is why they issue you, the government knows. It's not that they don't know, they know. They give you the tax ID because you're paying tax. I think back then in the early 2000s, I don't know the statistics, there were people who were making up these things and then they were using for work. When you work with a non-real social security number, your employer still takes out the tax. So that tax, the powers that be, they know that this money is not going to be claimed. It will disappear in some way, somehow. So the answer is, as long as you know you have an item, then you're supposed to pay tax. And your tax is 30%.
Wow. So are they filing or are they not? If you don't have papers, like legal papers to live here, are they filing, are they not, or they can just wait until then to file?
No, if they have a tax ID, because to be legal in the United States, because it's more like on a credit report where they say it's a soft hit or it's a hard hit.
Gotcha.
A soft hit is you are here in the US and you already have an item. You still have to file your taxes. Because the reason for the item, it's individual tax identification number. You are the individual who has informed the government that you received some income and then now you want to turn around and pay tax. So when you have an item, then you have to be able to file taxes regardless of your immigration status.
Got it. Guys, any more questions? Keep the questions coming. Really great. And we have a comment here, really great listen and very informative. So thank you to you, sir. And thank you for everybody who is participating. So after how long of working can you file taxes?
When you receive your statement of income, in this case, a statement of income, it could be like when you're working back home, you get a pay stub, or weekly, bi-weekly, monthly, you get a pay stub. Now, the accumulation of pay stubs for a given year is called a W-2 or a 1099 because it documents the amount of income that you earned in a particular year. For instance, we're looking at 2023, you get a pay stub or quote unquote a W-2 or a 1099, which has all your income for 2023. Now you turn around and use that, oh, in 2023, I, Coco, received $50,000, then you pay taxes. So if it's an item, it's 13%. So there are tax treaties with the United States, like China and these other countries, but India. Unfortunately, Zambia is not one of the countries which has a tax treaty with the United States. So you are at 30%. So you just have to encourage people to do a little, talk to a tax professional to help you plan, especially because this is the beginning of the year. We're looking for until 2024, December 31st. You want to make sure that at least you do your planning so that you know how to work, so that when it comes to December 31st, you already know how much you're going to pay the IRS. So if somebody made 1,500 weekly, by 4, it's 6,000. Now you multiply 6, so in a month you make 6,000. Or let's say somebody who makes $1,000 every week. So if you make $1,000 every week, you multiply that by 4 weeks, it's 4,000. Then you multiply by 12. That's your total income for the year. And then you, depending on whatever deductions, whatever credits that you have. And if you are single, you cannot file as married if you are using an item, it's single. So when you file, depending on your tax bracket, whatever, then you subtract your total income, less expenses, minus deductions and credits. That's your tax obligation. So that's how it works.
Gotcha. So you're talking about expenses. While we're waiting for people to put in questions in here, you're talking about expenses. What expenses really? I'm always confused with that. I buy suits for work. I buy food. I know that my kids, like daycare and all of that, does qualify, activities, does qualify. But I mean, gas, going to work, what type of expenses qualify? Because I want to put all of that, BJ's, Costco, all of that. I want to put all of that in my tax return.
Yeah. No, it's good. I mean, I like I keep the questions coming. Yeah. So if you're W-2, no expenses, because if you receive a W-2, no expenses that I have to add, unless, because your standard deduction, for instance, your standard deduction for 2024, which has been adjusted to inflation, is 13,000. I think, are you able to share the thing so I can, or can you pull up the, I don't know if on a separate window or you can share, we can explain to the people what we mean when we talk about these deductions. I think
this
it will
will
be
give
more.
us more people reaching out to you so they can,
Oh, okay. Yeah. So
we
people,
just
yeah, you
give
can.
a rundown.
Yeah.
So others, you guys, for
Oh,
more
okay. Yeah,
questions. I mean, we can go at this all day. I have
yeah.
plenty of
No, you're
questions.
right. You're right. You're right. Yeah. So if you're a W-2 person, which means all your expenses are taken out, the deductions, like, I mean, FICA, Social Security, Medicaid, and whatever tax, they give you the difference after the government's share has been paid. So if you're a 1099, then they give you the whole check so that you can now, in most cases, if you're a I-10, you have a 1099, which means you are supposed to pay the taxes to the government after you've received your income. But a W-2, they take out all the deductions and whatever else, so they give you the difference. So you don't have to have any expenses, unless maybe it's depending on your tax bracket. For instance, the standard deduction is, if you're single, is 13,100. Now, if you're married, it's 27,100. So unless you are telling the government that, hey, me, I am single, I had more expenses to run my business. In this case, like, if they exceed 13,100, then you can itemize your deductions. So in most cases, if they say you donated the car to whatever, Goodwill or whatever, or you did those big things where it exceeds 13,000. No, tithe, depending, it's tax deductible. This is why most churches, they'll give you the 1099 to, I mean, like a statement of what you've contributed to the church or whichever organization. So that if you think it exceeds more than 13,000, but chances are most people in a given year, 13,000, it's a lot. It's even better for us. Now, if you are a business person, if you are a caregiver, you're a contractor, what you want to do is you want to itemize. If, let's say, you are driving a truck and you have to go back and forth throughout crisscross the US, which means the mileage, the gas, you can deduct the gas, the mileage, the food that you eat on as you are driving and doing all these things. Those are the expenses that you have to make sure you keep tabs and proper receipts and all that. Should the IRS do an audit, then you want to make sure that you can back up what you're saying. But if you're a W-2, expenses, driving to work, you're supposed to do that. Taking care of the kids, paying for this thing, you're supposed to do that as a parent.
Lord. Okay. A question here. If let's say someone gets their tax that item in the middle, let's say it's June after tax season. So they get it June. Do they still pay tax that year for half the year? Or...
No.
So they have to wait till the following year. Like they say
year.
they get it June this year, they wait till 2025.
Correct.
Got it. How about people who own their own homes and they're filing for taxes? How do they include that? Or is that tax deductible or no?
First-time home buyers, there's a deduction for that, and there's mortgage interest, depending on your situation, because not all homes are made equal. And also it depends on the locality where you live. If you live, for instance, in New Mexico, Vermont, I think in Idaho, there is another credit which is going to be coming from the state, which the state will be able to supplement or add. But if you live in different states, then that's not applicable. So these things depend on where you are and what type of a house and what type of fuel. Just like if you call for insurance company, you want to insure your car, they'll ask you, is it automatic something? Does it have a remote entry? Does it have what? So it just depends. So depending on your locality, your house could qualify for certain deductions, but you want to double check with your tax professional and be able to advise, because that's sort of like a case by case situation.
Wow. Guys, anybody with one last question? I know some people joined later on. This will be posted on our YouTube channel. I've shared the link. If you look into the chat, I've shared the link, and it will also be posted. The audio version of it will be posted on all our platforms. Anywhere where you catch your podcast. We are on Spotify, Apple, anywhere, and also our social media platforms called Concrete Pastures, as you could see on the banner over here. But any last questions, guys, before we go? I want to thank everybody who's been able to join us. This has been super duper informative. I thought I knew some things, but I was in a whole new class over here. And it's always a pleasure to have you, Mr. Ndhlovu. Listen, we connect behind the scenes, we connect here. I always have fun. Any last words, any advice before I actually turn it over to him? For all of you that joined us and whoever is listening and watching this, he is an expert in our tax returns. You don't want to get it wrong. Trust me, you don't want to get it wrong. You don't want IRS to come after you. Speak to an expert, and he is an expert. Let's reach out to him. I'll have all his contacts, all his info. You guys can just click, go, and give him a call, and he'll be able to help you. He's been doing this for a long time. Let's leverage our experts. He's taken time to explain the ins and the outs of how our tax returns work. This was just only on the consumer side, and he does also the business side. So for all of you that have side hustles and businesses going on, you can also leverage him while you reach out to him as well. There's a message in here. Let me see his contact details. I will share. We'll be posting this the following Sunday. Our episodes come out every Sunday. So I'll give you the exact Sunday that's coming out. It's gonna come out the 18th. So the 18th, hold on, I'm sorry, Sunday, yes, the 18th, the episode is coming out on the 18th. So please look out for that, and I will share his contact in the show notes. In the meantime, he will share with you guys his contact. You can start reaching out because tax period is now. So he will reach out, right? You can reach out as soon as this call ends.
Yeah, so it's a pleasure to share these moments and figure out a way to help our people, because some of us have worked in this space where we're trying to keep our people informed, keep our people intelligent, keep our people in the know of whatever is happening out there. So when it comes to taxes, there are people who are in the upper class who are paying little to no tax legally. Why? They have a bunch of attorneys and tax professionals who help them plan. So when it comes to you, there are certain things that you can do to be in a better position to expect a huge refund when you file taxes, or to pay as low as possible, because in the tax code, it encourages people to use variable tax laws to reduce as much your bracket, your tax liability as possible. You've seen Donald Trump was sort of playing hard to get when it came to the taxes. He did that for political reasons, but not that he was doing anything wrong. No. What he does, and he continues to do, most of these huge people in the 1%, they pay little to no tax because they leverage the experts to help them understand. So what we try to do is to help people, like obviously today, most people have had a better understanding of the tax code, and there's just a lot more. So when it comes to taxes, there are different types of, so it's like an attorney who practices compensation law, injury law, motor vehicle, insurance. I mean, there's just different types. So when it comes to taxes, this is income tax, it's just different. So you want to make sure that at least you're keeping up with what is happening, so that at least you have a better understanding. And just like Nancy mentioned, you can reach out if you have questions, comments, concerns, or help you plan, so that at least when the tax season comes, you're not anxiously wondering, how much am I going to pay? What do I need to know? You want to make sure that at least you're proactive, you're doing your due diligence, so that at the end of the year, when the tax season is on, just like Michael Sata says, you end up with more money in your pocket. So that's what we're trying to do, to help you have more money in the pocket by explaining the tax code, so that at least you're better informed. That way, you'll be able to make wise decisions. I thank you for your attention.
Thank you so much. You mind just sharing your contact, the easiest contact?
Yeah, so I'm gonna put a tag. So there's a website
on the chat. You could just share it in the chat so everybody can grab it.
Yeah, so let me type the website is www.ways. Actually, let me turn off the thing so I can type properly. So the website, you can reach out, and we'll put the phone number. waysfinancial.com, and the phone number is 202-733-0809. So those are the contact details, and reach out, and let's help you to have more money in your pocket.
This has been an honor as always. I'm always excited to have you. And for everybody who joined again, it's also an honor to meet you guys and to have this dialogue, which is most needed in our community. We want to be informed, and we want to make sure that we have more money in our pockets. I appreciate you guys for joining. I appreciate you, sir. Thank you, as always. Thank you so much, guys. Have a wonderful and blessed day. Thank you.
Thank you.